Welcome back, traders, to my ICT's 2025 lecture notes. Now, today I'm going to be watching his trade review on February 3rd and giving you my thoughts. Now, I am skipping a couple videos, the SMC Mastery and the SMC Algorithmic Market on Close macro. I did watch these, but I didn't find them very educational. They were more entertaining instead. Both of these videos are basically trade demonstrations. He shows off a couple trades where his stop loss was one tick away from getting hit. And while it was fun to watch, he doesn't really teach the method or model that he was using. In fact, he said he would never teach it. So the videos were basically just him showing off a pretty cool trade. I'll have these linked in the description, but let's go ahead and take a look at the trade on February 3rd. And if you haven't done so yet, please smash that like button. Okay, let's go ahead and get started.
Welcome back, folks. All right, it's going to be a short little market review for Monday, February 3rd, 2025. All right, this is a 15-minute time frame chart for NASDAQ March delivery contract 2025. I want you to take note of this large gap in here. It is electronic trading hours. So there's this settlement price on previous Friday and Sunday's opening price. So that's your new week opening gap. And I want you to take a look at how we dropped down, created a low in the morning session there, came back up and slowly grinded back up into a gap closure there. 5-minute chart, same new week opening gap. It's a gap lower or a discount new week opening gap. Market rallies up. Again, relative equal lows, sell side there, and the market breaks below that and then sends it back higher into the gap. All right, so here's your 1-minute chart. Previous Friday's settlement price on the close. That's your new week opening gap high. Opening price 6 p.m. on Sunday evening Eastern time. That is your new week opening gap low. Why is that? Because it's lower than where we settled on Friday. So we have a discount new week opening gap. And putting the fib on the closing price on Friday and the opening price on Sunday 6 p.m. Eastern time. That gives you your new week opening gap gradients. Here's the lower quadrant, consequent encroachment or mid gap, upper quadrant, and then the high. All right, now here is the opening range gap. We're going to be using it on regular trading hours.
Okay, it can be a little confusing, so let me clarify between new week opening gap and the opening range gap. Now, if we go back a little bit, the new week opening gap is going to be drawn from Friday's 5 p.m. closing price here to Sunday's 6 p.m. opening price here in this example. This is the new week opening gap. Now the opening range gap is going to be drawn from the previous day's close at 414, which for Monday, the previous day is coincidentally Friday. So let's go forward a little bit. Now it's going to be Friday's 4:14 p.m. closing price to Monday's 9:30 opening bell. This is the opening range gap on Monday. So hopefully that clears up any confusion. I know it's a little confusing because we do use Friday, but we're using different times, and you'll have to switch it from regular trading hours to electronic trading hours to get the difference. But none of this is new information. You can find this in ICT's 2023 and 2024 mentorship videos. Also, leave me a comment if you want me to make a separate video going over what I know about the new week opening gaps, including how many to keep track of, the event horizon, and if there's a lot of comments, then yeah, I will do that.
Previous settlement, and then the 9:30 opening price. That's what that is there. And you're going to draw your fib from Friday settlement down to the opening price of that candlestick at 9:30. And then the fib, here's your lower quadrant, consequent encroachment, upper quadrant, and the high, which is previous day settlement. In this case, it's Friday. Now we're going to blend and add both the new week opening gap and the opening range gap, which is what's shown here in the chart right now. Okay, see there's a convergence of the lower quadrant, the consequent encroachment, and the upper quadrant. And the market finds some support there, here, here, and consolidated into that. First presented fair value gap. I know it's small, but that's what you have to note. Then we have our bearish SIBI, where it trades up into that, breaks lower. But once it starts to trade higher, my interest was I want to see if we can get back above the first presented fair value gap at 931 candle on 1 minute chart. And then above this SIBI here, and then that SIBI should turn to a inversion fair value gap. But that inversion fair value gap here, I want to be going long, aiming for this area up here. Okay. But in here, in this little tiny little section right there, my entry is trying to get as close as I can to that line right there, that midpoint. So I watched this candlestick go up, and as it was retracing back down in, I aimed for that. And the next candle, I waited for it to open and then start rallying back up into, and then that's when I set my stop loss. So what I was looking for is it to create the low of that candlestick there. And if you look real close, there's a little separation between this candlestick's high, that candlestick's low. That's a breakaway gap. Okay, so the market rallies, comes back down and finds some support at the lower quadrant of the new week opening gap, and then rallies higher into my target. Then it went into a rather sloppy consolidation, and I wasn't interested in doing anything with that. So I wasn't interested at that point whether it closed the gap entirely or reversed and went lower. I just was done. I found my setup, and I'll show you what that was.
So I traded this morning as well. I got in pre-market, was able to move my stop to break even as I posted on my X page, but the market did spike through my stop and I got slipped 10 points or so. Nothing huge, but I was still watching as we start to rally here. It moved really fast and I didn't see where I could enter for an acceptable risk amount. So I ultimately missed all of this. And once the morning high was taken, I just didn't feel like trying to get back in it, so I just ended the day with a small loss. But let's go ahead and see how Michael traded it. He goes on for a while, so I'm just going to let him cook.
Here's a 15-second chart. We're zoomed in. There's that same little area right in here. And if you look at what we got now, here's the execution. You can see where I placed my stop loss. Speed this up a little bit. So I'm buying 3 contracts as it goes into and retraces into the consequent encroachment. I have a little bit of heat here. Now, as soon as we get there, I'm setting the stop loss. See? There you go. So my target is drawn to new week opening gap, consequent encroachment. And you can see how that delivered. And I'm going to take you up to the first partial here. I wanted to show you the initial stop loss, why I was waiting to set the stop loss. It was based on this candlestick after my entry candle to trade back into the consequent encouragement. Once it did that, I felt confident that it would not come back down here because this would be a breakaway gap. And once it leaves the inversion fair value gap, it should not come back down into it. Above this high here, anything above that would be a wonderful candidate for a partial. And you'll see me do that. The volatility of the market today was really, really high. So that's the reason why my leverage is a lot lower, because my stop loss is around 20 handles. That's just a little bit higher than I normally have it. And there's the first partial. So zoomed in on a 15-second chart, I want you to see how hovering over top of the entry candle, you can see that little area right there. That's where the actual entry was. So I was real close to that midpoint watching it, manually entering that. Had a little bit of heat, not by much, and then it rallied back up. The next candlestick right in here, partial, is here. And then this one here, you can see the exit there. And finally limiting out on the balance there. So entry, first partial, second partial, final target right there on the new week opening gap, consequent encouragement. Real easy bread and butter setup. Okay. The trick is waiting for that trap of traders looking for lower prices. And if you go back and listen to the telephone channel, I will be prompting you to look at this fair value gap here. And I said, once we were in here, I want to see it trade lower. I favored it going lower, and it did. And then that was your first failure. Okay, so that was the indication there. I said, okay, then that was when I prompted everyone. Right when we were down here, I said, you want to screenshot that? And that's what a 20 handle scalp looks like. Okay, using very easy fair value gap, get 20 handles, move to the sideline. I'll tell you what this is in a moment, why it turned there, but I wanted to see something that would be bearish be overtaken to the upside. And that's how we know that the bait has been taken and they trap traders. So that all the manipulation has been done with this drop down, but it's very hard to read on days like this. So I have to force myself to wait for these types of scenarios where I offer a PD array. I'm committed to watching it, and even initially how it starts off, go back and listen to the Telegram channel. You'll hear me say screenshot that. That's what 20 handles look like. So that's against what my primary focus was in the morning, which was the consequent encouragement of the new week opening gap. That was what I was interested in. That was my initial interest, and that means I'm bullish because we have an extremely low opening range gap and new week opening gap, and everybody's going to want to dogpile in and go short. So that's what all this is. This is all luring traders to go short so that way they can rip their face off and then use my PD array here to get long, partial, and an objective at new week opening gap, consequent encouragement. Here's the minor sell side liquidity pool I was highlighting in the channel. There was a small one here, but right in here, this is a bullish fair value gap. That's what was dropping down. And once it goes below here, that fair value gap I told you to watch real time, it dropped down in that. And that's why I said screenshot that, because now I'm talking about it. You can hear it. And then the market rallied higher. If it would have kept going lower, you'll listen to a sound clip where I had 20,980 as a sell side liquidity pool. If I was not going to get a rip higher, I was not going to go short. It wasn't interesting going short. My interest was up here. And then seeing that PD array here fail aggressively, first percent fair value gap, you can see it trading above it here, and then it creates that little gap inside of this old SIBI, sell sign of balance, buy sign of efficiency. I'm going to trade it as an inversion fair value gap. That means it's reversing its role from where it was bearish here initially. Now I'm using it to anchor a bullish idea for my entry, going long, targeting my consequent encouragement of the new week opening gap. Very simple, but not easily executed on in a day like this. I mean, the volatility, like I said, is extremely high. I usually like 10 contracts, 15 contracts, but when the volatility is this high, you have to scale it back, folks. I understand everybody wants these grand slam home runs, but you can really get hurt fast when the volatility is like this. And it's a little bit more difficult than the average run-of-the-mill trading day. And it's because of the tariffs and all of the trade wars that's about to take place, and which has actually officially began.
So even Michael admits that Monday was pretty difficult with the volatility. You saw he reduced his size to 20 to 30% of his normal 10 to 15 contracts. I think for me, I just need to accept that I'll miss out on these kind of trades, at least for now, until I can get better at seeing where to put the proper stop loss. But personally, I'm not going to go lower than a 1 minute chart. So anyways, that's it for this video. Not a lot of gold nuggets, but we did get to hear his thoughts behind his trade and how he was looking for price to drop to half of that opening range gap. I hope you were able to get something away from this video, either from ICT or from myself. Make sure to subscribe for more, and until next time, safe trading.